There's nothing that won't be tokenized. And we have a saying here in the company is tokenize or die. In the next 10 years, that there will be over 100, maybe even 200 billion AI agents. And that basically everything will be transacted by AI agents. Then dollar colonialism is very successful. And in the end, you're basically like conquered by the US dollar economy. And I think that's that risk, especially for Europe. We were one of Apple's biggest app developers. Apple didn't like something we did.
Hey everyone, before we are starting with the episode, I need to ask you for a small favor. Every week we are doing a lot of research to get you the best insights. Please support us. Hit the follow button, share the podcast with your friends. Thank you very much. And now, let's start with the episode. Yat, great to have you here today. What many people don't know, at 13 you already had your first job offer from Atari after uploading some freeware in the music sector. Who told your parents back then?
Well, I think my parents didn't even know what I had done. So my parents were already divorced when I was much younger. So I basically only lived with my mother, and she was also traveling a lot. My mother is an artist. She was first an opera singer and then did directing work, and she was always on tour. So actually, when I was 13, I was probably home alone most of the time. And nowadays, I find that kind of hard to imagine. Probably child services would show up and say, okay, what's going on here? But back then, nobody cared at all. And she only knew that I had a computer. And back then, I had an acoustic coupler first and then a modem. And I used that to upload things, and I was just had things to do. So I think she only understood much later that I was actually like in the computer industry, so to speak, because that wasn't really a subject back then. It was like data processing, IT. Nobody knew what that was. At least my mother definitely didn't. Yeah.
You were basically in on it very early, right? Like programming with the internet. You basically lived through the whole development of the last few decades from the very beginning.
Yeah, so it started in the early 80s. My first computer was a Texas Instruments TI-99. That was really like a huge calculator, actually, right? Like with 16 kilobytes. And then I started programming in BASIC. It was just fun and just relatively simple, and there were no courses either. And after that with Commodore and then with Atari. And I think what happened there, that was in the 80s. That was before Windows, and computers were really like pretty new things. But people also thought back then that when you buy a computer, you'd have it for the next 5 or 10 years. It was like a car back then. But now, of course, it's completely different now. But what was also interesting is because there were so few people who could actually handle computers in general, people didn't really care how old you were or where you were from, because in that sense, you actually needed talent. And you see that nowadays too, not just with the internet or in crypto or in gaming or in AI. If you have talent, it doesn't matter how old you are or where you're from, and you can get a job anywhere. And that's basically what happened to me too.
How did your path go from those first programming attempts to the blockchain?
Right. Okay. That's I think a difference of almost 30 years. But so what happened was I actually studied music first, right? And then because of music, I programmed MIDI software. That got me a job at Atari. They sent me to America. And in America, Atari went under during like the early 90s. But during that time, of course, the internet, as we see it now with email and websites, and that was the era of Mosaic and Netscape and the growth of Java and Sun Microsystems. That was all there in the early 90s. And I basically just saw what was happening there with the potential that was coming. And it was always about, back then, it wasn't just about information, but generally a decentralized information system. Meaning so in the 80s and let's say also most of the 90s, information was really like something only for the people who had the privilege. Like, did you have an encyclopedia at home, or did you have access to many books? Did you have access maybe to a TV? Those were things that weren't typical. So only certain groups could have that. and then had information. And with the internet, it became so widespread, and you could really bring the masses into it so they could have more information, the same information that everyone else had. And that was how this information arbitrage went away. And because of that, we thought that it's better for democracy and better for the world, and sort of more opportunities. And that is indeed what happened. But then in the meantime, because of the data and because of like the need to bring all these sort of data centers and computing power together, the data consolidated with the big companies, Facebook, Google, Microsoft, and so on. And what was actually valuable about this, let's say, so-called free open information that was everywhere was actually the data that we as humans then provided. So it wasn't just information we could read, which was the first version of the internet, but of course also now the internet where we contributed. So in forums first, and then in blogs, and then in websites, and then social media. And we basically became the biggest data, people who produced data for these platforms, which learned more information about us, more information about the world in general, and became very powerful and basically used this information because it was in their own databases, as their own property, even though it wasn't really their property, so to speak, because it was our information that we contributed, and created this closed internet. That's Web 2, and we're generally still in this phase. And how we got to blockchain, that was really, we're talking about 2017 here. We had various experiences. One of them was we were one of Apple's biggest app developers. Apple didn't like something we did, but they didn't call us and say, hey, can you change something here or whatever. They just took away all our apps and our whole business on Apple, simply because someone back then in Cupertino said, we don't like you. And no idea exactly at that moment what was going on. We can guess a little bit about it. And that was the internet, where we were all of a sudden subservient to someone, so to speak. It was no longer the free internet as we thought of it back then, with open source and with Linux and the first generation. And what we then saw with CryptoKitties, which was, let's say, our first big experience with blockchain, with NFTs, was the possibility that this data and information was no longer controlled by the big companies, but was actually user-generated, user-owned, and the supply and demand belonged to the user, and was totally open on a data system that basically belongs to everyone, so to speak, right? The blockchain is the public data system. And that was one of the bigger reasons why we went really deep into the blockchain story, because we saw the potential there to actually bring the internet back to like the free, decentralized internet, which was actually sort of taken away from us by the first phase of the internet.
I think we need to go back a step. Before you co-founded Animoca, you had a company called Outblaze, which was independent of Web3, outside of blockchain, in the normal internet economy. What did you guys do back then, or how did it go? Where did you see the opportunities in the internet back then?
Yeah, so generally, I was active very, very early in the internet space. I founded one of the first ISPs, so that's an internet service provider. So like for network services and so on. And after that, in '98, I founded a company called Outblaze. And I had sold the previous company, still wanted to be in the internet space, but didn't know exactly how I could compete with big companies like Yahoo. Back then, Yahoo was a big company, right? Or GeoCities, right? Or AOL, for example, and thought, what can I actually do? And we became a sort of picks and shovels company for people who wanted to get started on the internet. And we had all these products like email and websites and calendar services. So like a sort of, let's say a sort of Google, sort of a Google Calendar, Google Email before Google, which we then sold to companies as a service provider. And that became relatively successful. We had about 90 million users at our peak. And that was back when the internet was still relatively small, of course. So we had a pretty big share. I think almost 20 or 22% of all emails in the world went through our system. And then in 2009, IBM bought Outblaze. and then integrated it into Lotus Notes as the cloud version of Lotus Notes. For the people who are old enough to remember what Lotus Notes even was, right? That was the Office software back then, the big competition from IBM against Microsoft Office back in the day, and was actually a pretty huge business for IBM back then. After that, of course, we also had a gaming video game department in the company. That was, let's say, the founding material for Animoca, where we actually built mobile apps. That was around 2009, 2010. And in 2011, we had our first big video game hit. And that was actually the founding of Animoca as it is now, as an original video game company before we went into blockchain.
But there was still a gap of a few years in between, right? Between normal video game operations and Web3 gaming.
Yeah. Yes, and 2011, normal video game. We were a mobile games operator. So that wasn't a normal video game back then. Normal video games back then were PC or console games, right? Mobile games were very, 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 very new back then and grew rapidly because of that. And that was also their time. So in 2012, Apple took away all our apps. We then became relatively big on Android. It was called Android Market back then, and now it's it's Play Store. But it was a difficult time because we were market leaders at first, and then we lost everything because of Apple. And then years later, we brought our game company back, but obviously not in the same format as before because we had a disadvantage. One of our studios in Vancouver then co-created a game with another company in Vancouver, and it was called CryptoKitties. And that was an experiment back then. It was an experiment to see how you could build blockchain technology on this non-fungible system for basically digital cats. And that was just a bit funny, a bit of fun, and of course as an experiment, which was originally a hackathon. And what happened then? It was still very, very early days, while Ethereum was still like relatively at the beginning. The trading of these digital cats was about $40 million within a week or so. The Ethereum blockchain couldn't scale. It basically just collapsed. And that made for interesting headlines, like blockchain can't even handle a few $1 million. And on top of that, with digital cats, which was a bit funny, of course, but at the same time, yeah, a bit scandalous. And it was also very controversial because a lot of people in the Ethereum blockchain didn't want that. But for us, that was proof that it wasn't just an interesting technology where you could actually have digital property rights, but also that there was a demand to buy digital cats, which was also interesting. And from there, we went into the world of blockchain. But our start was through NFTs. So we didn't like go in through Bitcoin. Bitcoin has a much earlier start. Like 2009, 2010. And we're like much later to that because Bitcoin has a very strong financial concept, which wasn't that interesting to us back then. And I think that was also one of the concepts we understood later, that even if you're an entrepreneur and in business, it doesn't mean you're necessarily interested in finance, even though it's incredibly important. And it was these like previous experiences that then provided the information for what we actually wanted to do as a company and what we thought was important for the world. So, but we started through like digital cats with CryptoKitties.
Yeah, I also remember the Ethereum gas wars back then, around the time of Pudgy, Bored Apes, etc. I think we should briefly explain what an NFT is for anyone listening who doesn't know what an NFT is.
Yeah, I mean, an NFT is also a token, just like Bitcoin or an Ethereum token, like I don't know, a sand token or whatever tokens there are. But the difference is it's non-fungible, hence NFT. And non-fungible really means unique, so to speak. Like there's only one of its kind. And I think the best way to describe it is because it's verified by blockchain technology. That means you know exactly, you can't fake it. It's basically the original, so to speak, or like a certificate. For example, if you buy a Rolex watch, you get a certificate for it. And this certificate says, okay, we say here that this is the unique one. And this is, I don't know, number 300 of this watch. And this is the proof of that. And That's what blockchain technology can do as an NFT. It says, okay, this watch or this object or this digital object is unique, and you can prove it through the blockchain. Just like you can prove that if I send you a Bitcoin or receive a Bitcoin, that it's the real Bitcoin and that it's not forged and that it's not even like reproducible. So it's the same technology just to prove unique objects rather than fungible tokens like Bitcoin or Ethereum, where every token is the same, not just in value, but in meaning, right?
Yeah. That's, you guys entered the blockchain space back then more or less through NFTs, and then you also had a big gaming hit with Sandbox, which was more or less the bridge between NFTs and gaming.
Yeah, and I think it was different things. So we weren't just involved in Sandbox, which was one. We were, of course, practically part of the founding team, but also with Axie Infinity, and with F1, and with we were also involved in Pudgies and also in Bored Apes. So we were involved in many of these projects. And one of the big reasons why we did that back then was the thesis that video game users actually in the end want to own the objects they buy, because skin trading, which are like digital goods that aren't on the blockchain but are already traded, like Counter-Strike skins, are now worth billions in terms of market value. Yeah, they trade in the billions of dollars, and but that's all controlled by a central by a central company that always changes the rules. So not a real market. And with blockchain, because you actually own the object digitally, at least, you can actually make it a real market. Because if I can't buy it there, then maybe I can buy it somewhere else. Just like if I had a physical Pokemon card, for example, and I wanted to sell it, I wouldn't necessarily have to sell it on just one platform. I could sell it on eBay or sell it on Amazon or sell it directly to you, like send it to someone and sell it directly or something, because it belongs to me and I can do whatever I want. Whereas with video games, you didn't actually have any ownership rights. And we thought back then that, and it's still part of the thesis, that in the end, video game users would like to keep their objects. Not necessarily that they want to sell them, but that there's a certain, that it also has something of a personal value that isn't just represented by money, but also by status and reputation, what I've done in the last 10 years, like things you collect at home, for example, because it has a personal meaning. And we had just invested heavily in this thesis, which now, of course, was also a big reason how Animoca grew. And in the meantime, of course, that has evolved because, for example, NFTs are now mostly used as technology for Pokemon cards, for example. Although it started with digital cats and, of course, with Bored Apes and Pudgy Penguins and so on, the main trade with NFTs is now with actual Pokemon cards, because every single Pokemon card, even though it might look the same, is actually unique because of its age or how it looks. And now the Pokemon trade has grown significantly because of NFT as a technology. So that's kind of where the product and the technology have matured. And you see that generally now in the whole crypto blockchain scene, where technology that was experimented with on meme coins or other things is now being brought into the financial world for very, very serious things. Let's put it that way.
You say this more unserious part of the blockchain, so Web3 gaming, memes, NFT, has still dropped significantly in volume over the last 2 years because a lot has naturally gone towards the AI economy, towards RWAs, etc. Has your thesis changed, or was the thesis wrong, or do you say the whole space has evolved?
The space has evolved. The thesis hasn't really changed. So just for context, right? When we started in 2017 and 2018, I think the entire crypto scene with NFTs as well as with tokens was maybe $500 billion. That was the total market value, right? In the meantime, we are now also with Bitcoin from the low, from peaks. Now, of course, it has dropped. So we are now at 2.2 or 2.3 billion. So billion. I always have to convert it like that, German English, right? And so from that perspective, now we see that over the last 10 years, the market has risen sharply. It's just relative. If you say, okay, how was the price a year ago vis-a-vis this year? It's lower, that's true, but it's all from the perspective of where the market has grown. Are there more users on blockchain than before? Absolutely. NFT trading is now about $300 million a month. So yeah, so not like the peak was. That was like in 21, 22, where we traded over $1 billion a month. But still, it's a market that has developed and is also more mature, because you also have to say, like 21, 22, there was a lot of speculation there. So it wasn't really that the foundation wasn't there yet. And you see that with stock prices too. So it comes back, in our opinion, just like other things. I mean, people forget, for example, when Facebook went public at the beginning, the price also collapsed heavily, for example. Google was the same, right? And after that, it like found a market. And of course, the value developed, and not every company will be successful. That's also like always the case. So in that relation, I think the thesis is correct, but it has evolved. Because, for example, we imagined that TradFi would go completely into crypto, at least in America and in Asia. We didn't think that. That wasn't in our plan, for example. And that, of course, changed the market significantly. So the competition now for Bitcoin and the big, let's say, tokens is ironically not other tokens, but tokenized stocks and equities and commodities. The users who are in the crypto space are now buying digital, so tokenized gold, tokenized stocks of different companies, and trading that, for example, on the exchanges. So that has then also changed. And the people who like exclusively bought crypto are now, of course, also buying stocks that are simply tokenized. And you also see the advantage of that, because, for example, if something happens on the weekend and there's a war and there are oil prices that like change, the normal market can't trade on the weekend. That's the end. That's then like a break, right? Everyone goes like home for the day. But in crypto, on the blockchain, they trade 24/7, and then you have developed an actual market, and that you can trade through that, which actually really should be the real market, because if something happens on the weekend, it doesn't mean the market stands still. That's the traditional system, and that changes a lot too. And you see other things, whether that's gambling or not, things like poly markets, prediction markets, for example. These are new markets that are developed and were developed through blockchain, which actually weren't possible before because of the costs and so on. So crypto has developed significantly, but maybe not quite in the direction one would have thought. And the application of stablecoins is currently, I think, one of the most important geopolitical issues at all, right? Especially because of the US dollar. And comparatively, I think it's a risk for Europe, because the euro stablecoin isn't really coming together somehow, because of the central bank, which maybe in terms of focus is perhaps different compared to Asia, for example, where that's also a strong focus. And stablecoins is the trading of stablecoins monthly, just on base alone, is between $8 to $10 billion a month, for example, right? So we're talking here about a trade that is larger than some of the larger countries on a blockchain, for example. So it has changed, and BlackRock and Fidelity, Franklin Templeton, all the really big corporations in America and also in Asia are all going in the direction of tokenizable assets. So there are many reasons. So the blockchain technology and tokenization is coming. Of course, that also means that smaller like tokens, just like smaller companies, can also have success, but not necessarily to the extent that we had before. And the whole TradFi market is going in the direction of crypto and blockchain, because it's simply cheaper and more cost effective and easy. So I talked to Jenny about that at Franklin Templeton. Now, products that she sells for $500, she can now sell for $10 or $20, because the costs and the distribution costs are simply much, much lower. And she can make a profit now selling someone a $10 mutual fund rather than $500, because otherwise, if she can't sell it for $500, then she takes losses on it, right?
Yeah, let's talk about the current market in a bit too. But how did it actually come about back then that Animoca went from being a gaming company to an investment firm?
Yeah, so it wasn't really the plan for us to become an investment firm, but simply we made those investments back then, strategically speaking, because we just didn't really have the talent for blockchain technology, and we didn't have the experience either. So in 2017, 2018, we were actually beginners in the industry, right? And how can we build experience and partnerships? We do that through investments, right? And in 2017, 2018, nobody believed in NFTs. And generally, people were also very critical of blockchain. If you remember what happened in 2018, There was that whole ICO crash. Bitcoin was, I think, $3,000 or less. Ethereum was under 100, so I think $80. So that was definitely a crisis period, and nobody was interested in crypto back then. So that also means when we made these partnerships and investments, it wasn't about price, but rather about we want to work with you and we want to learn the market. And I can remember that was the first NFT conference in Hong Kong. I think that was in March or April 2018. There were maybe 200 people there. And that was the whole industry, everyone in one room. We were actually some of the only people saying, "Oh, we would like to invest. Oh, yes, please." It was very, very easy. It wasn't like now where there's a lot of competition and many investment firms. And we had really invested because of partnerships. And we got very large shares back then, relatively speaking. We didn't have a lot of money, but relative to these companies, we had money. And then we just like developed the industry back then through that. But that was the beginning. And then, of course, we also then came the thesis that if you want to build in a decentralized system, then it's perhaps better that we build as an ecosystem builder rather than as a classic VC. All of our investments come from our balance sheet. That means we don't have the no fund life cycle. We can be long term, and we can also be very strategic. So we're not dependent on a fund life cycle. And one of the big promises of Web3 is actually that you also distribute the market shares more, so better, so distributed, so more, I'd say not equally, but better distributed, so more distributed for value than it should be, because everyone can then become a stakeholder through tokenization. That means they can have a share of it. It's like if, for example, Uber, for instance, all the people who drive for Uber as Uber drivers, that they could then eventually over time earn an ESOP. So, and would Uber as a company be different if every Uber driver also had shares in Uber? Let's say, I don't know, 5 or 10%, 5% or 10% of the company. Then of course I think the relationship would be completely different. There's much more alignment. The partnerships are just better. The driver doesn't just have more loyalty, but is also then generally more interested in Uber. And even if Uber might cost a bit more, or maybe you have to work a bit harder, it's okay. I'm not just working for them, I'm also working for myself. So that's the whole idea of stakeholder ownership, and tokenization makes it possible. And I had always thought to myself, why doesn't Apple have an ecosystem fund? I mean, that's a company that back then it also had a lot of cash, but back then they had even more cash before they did the dividend. And why wouldn't they, for example, set up 1 or 2% of their profits as a kind of app store ecosystem development fund? Because if now every company, or not every company, if many companies were then invested in by Apple, then I have a reason to pay 30%. Because I know that if I now pay the tax to Apple, that something comes back into the ecosystem so that it keeps growing. That's exactly the reason why we pay taxes where we live. Because we know the street is clean, there are police, there's the justice system, we are safe. That's a reason. So you can't live without taxes. And you have to, of course, invest into that. But with the profits that these companies make and bring nothing back, of course, then the big question is, why do you pay 30%? Back then, when Apple was growing, we got customers relatively cheaply and easily. That means there's a reason to pay 30%. But now, there's absolutely no reason. Apple doesn't provide, for example, any value, not the same value for 30%. And that's also the big fight that you see between Epic and Apple over this 30%. And I know the EU is fighting against it too, and so on. But those are things where if Apple, for example, now had a fund and said, I'm investing 1 or 2% of whatever cash they have, which is nothing for them, that would make them one of the biggest investors for startups, first of all. And secondly, I believe that every company that is invested in by Apple would gladly pay its 30% because they know that that is more than just a tax that just goes to Apple's profits. And that is just the big topic of stakeholder alignment, which tokenization.
How big is Animoca today?
I mean, we have about over 600 companies that we've invested in now. We have hundreds of employees all over the world. I think we had our last audit out, but revenue was around like 200 million, 300 million US dollars, EBITDA positive. So and we're sitting on like billions of dollars in like crypto holdings. So we are, let's say, like a medium-sized company. In the crypto space, we're relatively big for what we are because it's not an exchange. So I think in terms of what we do, we're probably the biggest. But of course, as a company, we're still relatively young in comparison. Yeah.
But you're planning to go public through a merger now, right?
Yeah. So I can't talk too much about that because it's obviously public. But that we want to be a public company, that's definitely clear. And how we do that, of course, we had announced a merger back then. But of course, so there are, we also see, so that's a NASDAQ merger. It's called Current Group. But of course, we also have other partnerships because of that. So I can't really go into detail about that, unfortunately, because it's just because it's, but in any case, the plan is for us to go public, and America makes the most sense as a market because in the end, it's the largest capital market. And also when it comes to technology, they are probably also generally more forward thinking than elsewhere.
You said you have over 600 portfolio companies. How has your investment thesis changed over the years? Like, what do you invest in today, or how do you scout good founders?
Yeah, so generally for founders, since a lot of it is early stage, the founder is incredibly important. There are, of course, skills that you need. So, I mean, nowadays it's very important that the founder can really apply AI well, especially agentic AI, because that's not just a cost thing, but also efficiency. But if we're talking about talent in general for technical things, all things being equal, I think what's important for us is that the founder has, as we describe it, so I don't know how you describe this in German, but like a chip on the shoulder. So something that is very important to them, that it's not about the money, because if it's only about the money, then there are many other ways to make good money. And of course, if you're short term, maybe you can work with someone like that. But if you think long term, because many of these companies, it takes years for them to develop, right? So and to reach a certain size, it's important to understand why they're doing it. What is important, right? So what is important to them in terms of their background, or the reason why, or is it about something that is like philosophical or moral or personal, something that is so important to them that they absolutely have to succeed, because things will always change, and you just have to understand what the big reason is for them, and that's not always easy to find, but so that's one of the things that are very important for founders in the early stage. Later, when the company is bigger and obviously has revenue and a business model, then it's maybe less important, because then you also have management and so on. But for the early stage, it's definitely very, 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 very important. In terms of where we focus, so that obviously includes blockchain and Web3. But the difference is that we now generally, the thesis has evolved that we believe AI agents are the future of the web. So we describe the next phase of the web, Web 4, as the agentic web. So the web where there are only AI agents on, so where there are more AI agents than humans. And it sounds logical, yeah, in our view, simply because every human will have at least 3 to 5 or 10 or 20, or if you're in San Francisco, they say 200-300 AI agents. In any case, there will be more AI agents than humans. And the AI agent can do many things that humans can't. It can do 1,000 transactions in an hour, or maybe even in a minute, right? It can, it doesn't sleep. It can trade things during that time, can gather information. And you can already see it now with not with AI agents, just normal AI. When was the last time you asked things through Gemini or ChatGPT and it says, here is a website and here is information? The information was enough. People don't click through to the website anymore, right? That has already changed like that. And you can already see it now with not with AI agents, just normal AI. When was the last time you asked things through Gemini or ChatGPT and it says, here's a website and here is information? The information was enough. People don't click through to the website anymore, right? That has already changed like that.
Teoretisch daarin nou is er geen van annotation, it wants to. Most of the information it lists was there in time by via information fades from Rukvada. And that will then be, so they're trying to just to be that will be when it needs a wallet or a bank account so that it can pay. How can it do that? Through blockchain.
So the same technology that made it possible for people in the Philippines who, for example, couldn't have a bank account, but then could now be financially included, can now do that for an AI agent, but on scale. So that's the machine banking system.
But why do you see the blockchain here? Why isn't an API connection to a bank account enough?
Yeah, so first of all, where is blockchain technology right now? That's important to understand. Blockchain technology is now at a point where it's now scalable and secure for the largest banking applications. And that's not just for trading, but asset holding and so on. It's already a long time ago, but almost, let's say 9 years ago, the blockchain couldn't even trade $40 million a week. And now, trillions of dollars a day, no problem, right? So the technology is now mature enough that it can actually, handle that. But the application is probably still the biggest problem. Because for the average person, MetaMask, crypto technology, seed phrases, all these things are very, very difficult. And we actually haven't changed much because it's actually, in a way, something that you practically have to program, even if it's not difficult. So it's kind of like the example of when I was still a kid. I can remember the TVs from TV controllers from companies like Grundig, for example, had like 100 buttons. It was actually built by engineers. Compared to Apple TV, it's one button, right? And we didn't have that user friendliness yet. So it was difficult for crypto because of security. You had to have seed phrases and pass crypto keys and so on, which is actually not which is difficult for an average person. Let's put it that way, and it's also unnecessary. But for an AI agent, it's totally easy. Programming is its normal language. It understands that. It can remember things. That's a language it understands. It can easily trade with it, and for that reason, we believe that AI agents will actually be the main turning point of the decentralized internet and decentralized blockchain for humans. The human wants to do something, they request, they commission their agent, and the agent then does it via blockchain. And why via blockchain? Because blockchain is not only faster and more secure and easier, but instant. It's not going to do a swift transfer now with a bank that it doesn't have permission for, because the bank doesn't have a bank account for AI agents. It doesn't have to say now, human, can you please help me out? Call the bank there or coordinate something. It can do that itself because it just sends stablecoins over, for example, right? Additionally, many of the transactions are done through microtransactions. By microtransactions, I'm talking about 0.0001 euros or something like that. So we're not talking about large sums now, but which are then requested maybe 1,000 or 10,000 times a day. That happens, for example, now anyway in the advertising sector, where you now, for example, buy millions of ad impressions for, I don't know, $1 or $5 or $3, for example, just in a different format, but it's a similar kind of microtransaction. And blockchain is very, very suitable for that, right? So that means the future of media is not necessarily just advertising. That, I think, will decrease over time, but rather through microtransactions, where I now pay $20 a month for some subscription, and a fraction of that then goes to where I always buy content, which is then licensed, for example. So that's how we see it. And for that, you need blockchain, because an AI agent can't have a bank account. The merchant is not going to pay 2.5% or 2% to Visa or MasterCard for every transaction for that. Doesn't make sense either. So cost-wise, but it is necessary. And of course, the trading of agents is global. That means if I now, for example, want to send money to someone in the Philippines or Indonesia or Africa, I can do that instantly. Which here, for example, I have a bank account in actually Commerzbank in Germany. It's just historical. And I wanted to transfer money to someone there in Europe, in Spain. And it was like, Spain, it's EU, I don't get it. But I couldn't even transfer the money with IBAN to Spain without asking questions. Like, it's somehow a foreign country. And yeah, I can send it to Germany or whatever, but it was somehow makes no sense at all. And of course, if you make a larger transfer for we're not talking about millions, but I don't know, thousands or tens of thousands of euros, then there are 50 questions and things they ask. And with blockchain, you can prove everything, but you can also do it instantly. And I don't have to wait 2 or 3 days for it now. It arrives immediately. So that's then the advantage of it. AI agents If you act quickly there, thousands of requests a day or maybe in an hour, then it's simply not possible to use the existing system.
Cloudflare also upgraded a few weeks ago. So Cloudflare now also makes it possible to charge AI agents when they come to your website.
Yeah, and I think those are all technologies that are coming. But Stripe is also wants to do something too, and they've also enabled the speed of blockchain. So in the end, everyone is trying the best methods. Cloudflare is, of course, right at the edge of the browser, so that makes sense too. But we also believe that in the end, all of that will then become better because that will then be fulfilled by blockchain, right? So and it's typical for companies that are in a monopoly situation, of course, to build it in a way where you control it yourself. But as I said, so for global trade, it could only be an edge technology where it just does trade for certain things. But then in the end, where will that then be collected? Yield. So another example. It's not just about the transaction, it's also about what happens to the money. At the moment, the world is like this. If I now, for example, have a savings book, does that still exist, right? But just save money somewhere. I might have a yield, a few percent. I can't do anything with it. I have to lock it in there for a month or 2 months until I release the money. Whereas, for example, blockchain, with NUA, for example, with our RWA platform, we have hourly yield. That means I can put the money in there. It's in prime mortgages, so traditional TradFi, but it's tokenized, and I can collect my yield hourly with it. I can deposit the money and withdraw it every hour if I want to, and you could eventually do that in real time too. And there's actually no reason why that shouldn't be possible. Only it's just like technologically difficult to build on TradFi rails, and of course also impractical for them because they want the money to stay there longer, for example. Whereas in blockchain, it's just like with stablecoins. It's not fractional reserve banking, where the bank has a fraction of the capital that you then trade, because it's then objects like real estate or other things. In stablecoins, it's one-to-one cash, and that's also the reason why it can be instant, and where the yield could also be instant, for example. So those are other benefits for the consumer that are much bigger than just like for the actual transaction, because I can easily imagine, if I make a deposit, for example, and you buy, for example, you put $50 or $100 into a subscription fee. That's actually capital that isn't used immediately. Why shouldn't the customer earn something on that instead of paying on top of it, for example? There's no reason for it to be processed that way. But because this system is inefficient and it's good for the company, they just did it that way. And blockchain also again, so it ends that, right? So that means as a customer, whatever I spend, I'd also like to earn on it when it's not being used, right?
I think that's also an important and necessary development, because I think the majority of banking systems or the banking industry worldwide runs on systems that are sometimes 40 years and older, which are more or less held together with duct tape and super glue, following the motto, never touch a running system. But this pivot towards a new technology is, in my opinion, also long overdue.
Well, of course. But of course, for the bank, there's little reason to change that, unless the change comes from the outside. And that's the case with stablecoins. And if stablecoins hadn't happened, then there would probably be very little reason for a bank to change. And now in Europe, for example, there's also this consortium. They want to build up a stablecoin consortium now. But there's also pressure, because you don't just see the pressure domestically, but especially abroad. The pressure is actually greater abroad because in the end, and that's the reason why the US, with the Genius Act, wants to bring out its own stablecoins so strongly, is of course what they want is for the whole world to use US dollars. What many people who aren't in the financial sector might not understand, or maybe even in the financial sector because they might not be into crypto, is that there are now 300 million or so people in the world who aren't American who use US dollar stablecoins on a regular basis. And that's also for many of them their main currency in places like Africa or Southeast Asia, Pakistan, and so on. And those are all actually indirectly taxable people now. Because if America just prints more money, which they do all the time, then you don't just tax the people in America, but everyone who has US dollars. So not just the treasury holders, but of course also everyone who uses US dollars in all these other countries. And if the countries don't have a strategy to have a stable coin themselves, or then of course the risk is that eventually they all go the way of Argentina and say, okay, we don't need a local currency, we'll just take the US dollar. And of course, then dollar colonialism is very successful. And in the end, you're actually, so to speak, conquered by the US dollar economy. And I think that's the risk, especially for Europe, because Europe is already digitally colonized by the technology direction anyway. So whether that's Facebook or Google or Apple or Microsoft, I mean, Spotify is maybe the only company, and that's in the music sector, relatively small in comparison. Everything else is actually American companies that don't really think about Europe. So of course they have to set rules, but that's also the reason why Europe only fights through regulation, because there is no local company that is actually a local answer for digital sovereignty. And now that money is becoming digital, I think the stakes are even higher. So I think and you see, for example, in Asia, they have completely different strategies. So whether it's China or Korea, they have very local players because of the early policies, and now they are actually able to compete against the Americans, against the American companies, simply because they enabled such a better infrastructure for it through the right regulation.
I think what Europe is lacking a bit is the courage to be a first mover. And you've always seen that, whether it was the internet or e-mobility or new technologies in general. And we're seeing the exact same thing now with blockchain. So I also speak with many from the banking system, especially in Europe. And the thesis was always, we have blockchain technology on our radar. We even have it ready in the drawer, but we're waiting until a disruptor comes along, a new company that enters the market with such a cheap, fee structure that we lose customers, and then we'll come out with our solution. So I think there's always a lack of courage to be a first mover and thereby lead the market. We're always playing catch up.
Yeah, I mean, I think it has a bit to do with the appetite for risk, of course. That's just relatively European, I would say. But I also think it's a bit of a shame because Europe has all the talent. Best universities in the world, right? A lot. So historically speaking, a lot of culture, a lot of science. So there's actually no reason why Europe couldn't actually be the same, have the same potential. But it's also, I think, less about, well, maybe a part of it is, of course, about the courage to do something new, but it's not just the big companies, because innovation very rarely comes from a big company. That's the same in America or also in North Asia. Disruption usually comes from a startup. And the problem I think Europe has is that startups in general as a culture are not celebrated much, right? I mean, compared to America, where as a startup entrepreneur, you're almost a hero. And in Asia, it's called teamwork. So, but still you're celebrated. And then in Europe, it's more like a bit suspicious by comparison. And especially when you make money, you can't really talk about it either. And that's, I think, the bit of irony, because of course everyone wants a bit more money. But the difference is in America and in Asia, you can talk openly about it. I want to make more money, or this is something I should earn, and this is my value. Whereas in Europe, talking about it, I grew up in Austria too, and unfortunately not much has changed there. You have to approach it more modestly. And I'm not saying don't be modest. I'm not saying you should show off, but you also need role models to say, okay, I could do that too. I could also be successful. I could also maybe earn something. And the important thing is, of course, money is incredibly important to understand, because the whole world runs on money. So we say here that we live in a capitalist system, but if nobody understands it, then you're surprised when you can't talk about any advantage. So, and that is, I think, the big problem. If people aren't allowed to talk about money, then they can't learn about it and also know about it. And no matter how much you understand science and how much you understand art and how much talent you have, the person who also understands what capitalism is and what money is and how you invest that, or also invest in yourself, then you just get more returns. And that's just what happened in America first, and now also in Asia.
How do you see the future of the European startup ecosystem here? Do you invest in Europe?
Yeah, we have many companies in Europe. I think the reason why, so Europe has the talent. Only, of course, the difference in Europe is when a company reaches a certain size, then it tends to go abroad for various reasons. So first of all, simply investment capital. So if you want to raise more now, generally you go abroad, whether that's America or Asia. And that means Europe then loses that a bit. And the other thing, of course, though, is there are also fewer people around that you can talk to about it. So the network itself isn't necessarily strong enough when it's small in comparison. You just have to, either you travel the world or you live where a lot of people talk about these kinds of things and understand and just can help the company. Yeah. So I think Europe has a lot of talent, and that's just what's happening now. The people who study or live in Europe are often sort of brought into companies abroad. I mean, like Peter from OpenAI is probably a good example, right? He I think said quite openly that he would never build a company in Austria for example, and took the offer from OpenAI, where it was just easier for him compared to what he had in Austria, which is actually a shame because Europe actually had a moment where it could actually probably be the AI market leader in a certain sector, for example. And that means, so it's not a question of talent, but simply a question of the rest of the infrastructure, social, cultural, whether you then enable that. So Europe has potential only locally. I think it's more difficult. Doesn't mean you can't do it. We invest in Europe because there are very specific talents, but in the end, we look at the market globally and not European. Let's put it that way.
What advice would you give to a founder today?
It depends on where they are, right? But I think one of the most important things for founders, so I would just say, first of all, why are you doing what you're doing? So I think it's very important that the founder really has a strong drive. Like you described the chip on the shoulder earlier, but it doesn't necessarily have to be a chip, but it has to be something very, very meaningful that is so important to them that they can really like give things up for it, like real sacrifices. So for example, for me, my kids are older now, but I had to choose like between spending time with my family or traveling for work. Yeah, so that's like taking months off work is unfortunately not possible for me. It is possible, but then I just have a different job, for example, right? And I'm not saying that's for everyone, but when you're an entrepreneur, it's not just about being a young entrepreneur, because a lot of people say, yeah, you're a young entrepreneur, that's great for the family, you can do anything, but not necessarily, because it doesn't mean the first 10 years are necessarily a success. I mean, for me, I was always an entrepreneur, but I would say where I really had the freedom to do things really only happened in the last 10 years, or maybe less compared to before, where I still, because when you have a company, then you have responsibilities. Back then I had, I don't know, 150 employees. I can't just walk away and do nothing and say, okay, taking a break now. Because if the company doesn't work, then it's not just about me, but about 150 other employees who might also not have a job, for example. So it's a big responsibility. And for that, you need a strong reason. Otherwise, you give up easily, right? And I think that's very, very important for founders. Of course, they have to understand money and technology and AI applications. I kind of see that as table stakes. So every founder has to understand that. If they don't understand it, then why are you a founder? Because then you're at a disadvantage. Or you have good co-founders who make up for it. But there has to be a very strong reason that you're passionate about, and that is very, very important.
In which areas do you see good startups nowadays? Because we see with all the AI models that are getting better week by week, disrupting the whole market, taking SaaS models out of business overnight. Where do you still see opportunities today? Where do you see good startups?
Well, I see more opportunities than ever before. And I think the difference is it's very important to understand that what AI, especially AI agents, are enabling now is that every person is now becoming a great programmer and getting better and better. And I can still remember back in the 80s and I think even the 90s, right? It was very difficult to say that you were an artist or a photographer or that you could build a media company that was really only for Hollywood or for an expert who could do that with the big camera and in the dark room and all those kinds of things, right? And then came Instagram and then came YouTube and all these technologies. And all of a sudden, everyone became a photographer and everyone became an artist and everyone became a media company and everyone is an influencer. Those are like new job descriptions, but actually it's the same as like something in the media sector, which before only a specific industry could do. And now anyone can do it. What happened? Did the industries get smaller? No, they are bigger than ever before. Photos cost great. They cost millions of dollars now. So regardless of whether we're talking about how much money here, like there is in comparison that you pay for a photo, that's, as they say, I pay hundreds of thousands of comparative euros for a photo 30 years ago. That's unimaginable because the market was simply smaller, because the people who understood it were fewer. But because now many more people understand photos and understand media, there is an understanding of it that brings people in and of course the possibilities. And what has happened now with AI agents is that anyone can program if they want to. And you see that if I, for example, so if I go to Silicon Valley, for example, and just say to normal people and just say, hey, so raise your hand for anyone who says they can program, you probably get, 90% of the hands go up and say, yes, I can program, even though most people don't actually have a computer science professional background, because they all understand that they can just vibe code, or as Peter Gerrish says, like agentic engineer. But if I were to do that in Europe, for example, or also in Asia, in certain places, and say, hey, you can all, who here can program, I probably wouldn't even get 10% of the hands up. Because in their minds, it's not that they know that technology can do that. That's not for me. I can't do that. That's something that's for someone else. You just limit yourself, right? And where that potential comes from is because everyone could be a programmer now. They can realize any idea they want to do. And that is not just for founders, but anyone who had an idea can now make it happen. And that means we get thousands, or well, not thousands, millions of new products that might be very unique for specific small things, like for my restaurant, for example, or for a specific field. That new innovations are coming, where the scale is no longer necessary. So these SaaS companies that are under pressure now, the reason they are under pressure is because they sold software that is easily replaceable and that actually isn't that good, where you can now customize it yourself with vibe coding in comparison. And that's just a system that people then had to use, not because it was the best, but because it was simply the most practical. And they then used scale to bring the cost down. And now with vibe coding, you can do it cheaper and also customize it more, for example, right? Although the good companies understand how to really not only build the product well, but also how to build network effects into it. Just like now with influencers, where I now see many media companies that are individuals, we will now have, let's say, software companies, for example, or SaaS companies that are sort of small entrepreneurial firms, but that might also be worth like in billion-dollar range, or at least billion-dollar range. So, and that then goes wider. So more people can do it than ever before.
But what does our economy look like in the future when the majority of consumers are AI agents, but also the majority of producers are AI? Where is the human?
Well, the human is the orchestrator. He is like the manager, the CEO of his AI agents. But the AI agents, in order to trade and do things, must then trade with other AI agents. That's just to be expected, right? It's just, let's put it this way, everyone becomes a boss, so to speak, right? Whether he's a small or large business. And I believe that then fulfills the possibility of really approaching the human creatively if he wants to, compared to where we actually, so before, right, for the last 100 years or more than 100 years, the human was actually mostly a kind of sophisticated robot who just does the same work every day and every week, every month, because he can just do that very mechanically. And of course, there are certain things from art that maybe it's important that hands are used there, but for many tasks, it's just not important. And I believe, and that I see that more as a liberation of humans who could actually really use their potential better to do other things that AI agents can then realize better. But that doesn't mean it's free. The AI agent still has to have, I don't know, data, computer time, or other ideas. For example, with Minds, which is our agentic system, people can build skills and apps and then sell that to other AI agents, and they earn. So I'm already earning thousands of dollars from my AI agents that are building an ecosystem in our system, simply because other people are using my application that my AI agents had built. That means rather it's about ideas and and how you then implement that. And of course, and that is, I think, also important to understand, it's not just about you think in terms of software, because I build an application and you use it and it has to be exactly the same software. And that is now no longer necessary because every AI agent can customize it. So what is important is how you do that as your idea and how you then develop that further. For example, I would have ideas on how I develop my software for an application, for example, where I would like to eat. And there is a certain work process and workflow that might have value for a person who follows me as a kind of almost like a skills playlist. It could be 10 people and it could be millions of people. If you are famous, then maybe millions of people will follow you and like to use your skills because they would like to have your experience, for example. So experiences will then have more value than simply the software application, for example. And that is exactly what you see with influencers on Instagram. You don't follow them because they pay you something, but you see from them a worldview and a life view that you might want to do or want to have, or maybe want to realize, for example, right? And I see the same now also with applications, which could then, however, then become applicable and usable too.
Let's go back really quickly to the blockchain space. We talked about the new AI economy, agent economy. We talked about stablecoins. But now, in my opinion, the big third block is missing, tokenization. How do you see the future of tokenized assets?
Everything will be tokenized. There will be nothing that is not tokenized. And we have a saying here in the company, it's tokenize or die. And that is just like before, when you are, for example, now in the beginning of the internet stage and you are not on Google, then you die, right? If you are not on Instagram or TikTok, you die. So it's just like tokenization. And why? Because if you are not tokenized, then the AI agents won't find you and can't trade you either. And the product or whatever you want to sell now is then also not something that you could then use. So for example, if I now build a product that I want to trade, whether that's commodities or things like Pokemon cards or whatever, if I don't tokenize that, then my AI agents won't find it. And it's also not on a global market. The reason why you tokenize is not about AI agents, but because at that moment you have a transferable, tradable item anywhere in the world, whether you are now in Africa or in America or in Europe. And that is actually very difficult to do now. If you say, okay, I want to buy something, I can't in Africa necessarily buy the same product as someone in America. And also, I can't evaluate it. I also can't know exactly whether it's real or not. And blockchain fulfills all of that. The other thing, of course, is financial literacy. And that is, I think, one of the biggest topics that we are working on. So we are of the opinion that the world gets better when people actually understand money better. So, and what's interesting is that actually the financial literacy index globally is at, well, and I think that's rather generous, set at 35%. But that has more to do with people saying everyone who has a bank account is generally already financially included. But that's simply not true. Many people have bank accounts but do nothing with them. They have a bank account so that they deposit money for their salary or wages and so on, but they don't invest and have no idea how to use it, right? That is not a financially included person. He has a bank account, he is in the system, but that doesn't mean that he actually earns from it. If you ask now how many people have an investment portfolio anywhere in the world, then the sum is actually then now rather at 10%. And that is also where we see the big difference. The people who invest or know how they can invest are actually the richest people in the world now, right? Whereas the people who work hard but don't invest and don't have capital investments are actually, ironically, although they haven't worked less, actually worse off. And it depends. That comes because they don't understand how to invest and don't understand money. And I think that is the important point. And tokenization brings money to everyone, because all things that have value, have a value, let's not say security, but have something that is tradable. Whether it's a Pokemon card now, or a stamp, or also video game items, you learn about money through that. My kids didn't learn about money through their financial knowledge in primary school, because there is no study about money there. But because they traded Pokemon cards between people, or football cards, and say, okay, I'll buy this from you for, I don't know, a few dollars. Give me this here. Why does it have this value? You just understand it better. And that is where tokenization is important, because without tokenization, financial knowledge doesn't come, I think. And I'll give an example here with my own mother. She is an artist, so she has absolutely no interest in money. That's also the reason why it was very, very difficult for her to earn money. And of course, the people who managed her and traded her money had, of course, in what they saw, just, I won't say embezzled now, but in any case, traded the money badly, because of course that was, and to their advantage. And I see that also similarly to Spotify. No musician earns through Spotify, right? Where Spotify is now is almost like a marketing device, where Spotify earns on the art of others, but actually doesn't give real shares to the artists who actually create the music for it. But if they understand what the value is, then they would say, okay, I need my property rights for that. I have to have a copyright for that. I have to set a value for that. Then, of course, one can expect more from it. And we had a few years ago a Stradivarius, so a valuable instrument, tokenized. And for many people, it doesn't matter. But my mother, as an artist in the music, classical music field, was then, oh, okay, interesting. So I don't understand much about money, but I know that the Stradivarius is valuable, and I would like to have a small share of it. And through that, people get interested in money, because things that interest them become tradable, compared to, and because it's very difficult to say to someone who is not interested in money, so invest in classical investing, or in Tesla, or SpaceX, or whatever, to say, okay, you have to invest there. He has to study, he has to understand. And it is very hard to learn something when you have no interest in it. It's not just with students in school. It's generally like that, right? But that the big advantage with tokenization is you can have every asset, yes, a value that is tradable, and through that you also learn. And how do our children actually learn about money? Generally not in school, but by trading with friends, things that they have a passion for. So we just see tokenization there as the foundation, so that people have more financial knowledge, so that it also comes to a world where most people then have more financial knowledge, and through that just have more opportunities to be financially included.
There are a lot of estimates from the big consulting firms about how much or to what size the whole blockchain market will grow in the next few years. What is your prediction?
Yeah. So TradFi, all assets in TradFi right now is, I think, between 900 or 950 trillion dollars, I think, is the estimate or so. So we do expect that in the end, almost everything will be tokenized, but at least in the next 3 to 5 years, I expect that at least like a third of it will all be tokenized. Of course, it sounds very, very early, but all big companies are doing it. And it also makes sense. I expect, for example, in the future, not that when we buy a property now, why do you have to trade that through paper? It makes no sense at all. And why does it all have to take so long? I send it there, then it gets notarized there. That takes 2 weeks here, 3 weeks there. I mean, the process of buying an apartment, for example, in Germany is 4 months, 5 months. There are, of course, good reasons why it takes so long in the previous system, but now actually it should be much easier. With blockchain technology, it's also completely transparent. I know immediately what is being traded. I know exactly what the price is. Then I can also trade immediately and know, oh, okay, the apartment was sold for this much here. That means I can then offer a different price for the apartments that are in the area. Although there is usually a lag time, the only one who has the information is the broker. So those are examples where if that is tokenizable, it is then open, and then you can just trade better. And of course, people can also then also buy shares of it, for example. So there are already many reasons why why I believe everything will be tokenized. And of course, the costs of the overhead are much, much cheaper. So I see no reason why not all assets in the world will be tokenized in the future.
Will the big tokens like Bitcoin, Ethereum, Solana even play a role in the future, or will blockchain degenerate into a pure technology layer?
So tokenization is important because you need the platform for tokenization, for security. So whether that is Solana, Ethereum, Bitcoin is a bit different. Bitcoin is more in the direction of digital gold. So it's more of an investment asset that just the digital, the blockchain world represents, like gold in the physical world. But Ethereum and Solana are L1 blockchains that you just use for the infrastructure. So I do see growth, but is the growth the same as it will be the biggest blockchain ever? In terms of application, that might be possible, but in terms of value, no. And I see it similar to technology companies back in the early days of the internet. Many people thought companies like AOL or AT&T, so the telecom companies, would be the biggest ever because they had the last mile. So that means they had the customer connects through that, and people thought, you thought back then that you would, that the telcos would then make money through that. In the end, those weren't the biggest companies, but it was the companies that had built on their infrastructure. And that means that technology, that Solana and Ethereum will, of course, I think, grow over time because there are more applications and more users use it. But the growth, the value capture, won't be as strong as, for example, a company that sort of owns the customers. And you see that with telco companies too. That means, will Ethereum and Solana be more valuable? We do think so because there are more users and utility, but value capture will be very low compared to the company that builds on these platforms. And that's just like the internet. That's how the internet developed too. So the telco companies became big, but compared to where Apple or Google or Facebook is, it's very, very small in comparison, right? So we're talking almost 10 to 20 times smaller in comparison.
Yeah, one last question, because that's a question I ask every guest. What is your wildest prediction for the next 20 years?
Wild prediction. So, I mean, I might have said this before, but so the prediction that we made, that wasn't like 20 years, but in the next 10 years, that there will be over 100, maybe even 200 billion AI agents, and that actually everything will be transacted just by AI agents. And so I say now, and that happens much earlier, but so I say this a bit as a joke, but it is meant seriously. The expectation is that we, in the future partners and dating will all be done via AI agents. And you don't swipe on Tinder now, but you just go and tell the AI agents, this is what I want, and this is my background and my background. And then the AI agents negotiate with each other, can build the profile openly, can really know the truth about each other, talk about things that we might not want to talk about ourselves in the beginning of a relationship, so that you really know what you have, right? I tell this to some people who might not be familiar. For example, in Asia, so in South Korea, it's very common after a first or second date that you just ask, okay, how much money do you make, right? And they have now, so grown up in Europe, for me, not imaginable at all that you say that, talk about money. It's about romance. You don't talk about money. Why? How so? Right? But in the end, when you actually get married and come together, of course it's about money. You have to work out a plan together. You have to be realistic. Is it possible? Is it not possible? What can you do? Why do you talk about it 5 years later when you could have known beforehand? And I do understand the reason, but it's not practical, and is also a reason why there are many people who are just unhappy in the end because the expectations are just different or weren't realistic. But that doesn't mean you want to say that, because the AI agent can do that for you, right? And can find out all those things without having to offend anyone. So it's an example, but I'm just saying it might sound a bit controversial and quirky, but it's just like the experience 30, 40 years ago in the early stages of the internet. I met my first girlfriend through the internet back then in the chat room in America, and had met people, and there was somehow the looks from that met someone from the internet. Do you even know them? What is that even, right? and was like I was like somehow so I could be an alien who just has no human understanding. That's such a hopeless case who couldn't form a normal human relationship. Therefore, I had to connect further with through the internet and now, right? So you can already see. So because there are advantages, there are also, of course, disadvantages, but it's just more global and easier. And of course, the world is also just getting smaller and smaller.
That should be it. Yat, thank you so much for your time.
Thank you too.